Google stock over the past year down 27%, but year to date, it is ripping higher, up over 20%. What is Google going to need to do over the next 12 months to hold these gains to keep an impressive 20% return for the entire year? We'll discuss that and more on today's show. What is going on, investors? Hopefully you guys are doing well out there. Obviously, we're going to be talking about this in the context of those Q4 earnings, which came out after the bell for Google. We'll get into those. We'll take a look at the revenues, the different business segments, how the cloud business is scaling up from a profitability perspective and even a revenue perspective, how YouTube is doing over at this company as well. We'll go through the balance sheet. We'll go through the profit and loss. We'll go through cash flows. We'll take you through everything that you need to know when it comes to Google. And we'll come over here and look at this from a technical perspective as well. Like a lot of stocks, this one's actually broken out above, not just the stocks, the entire stock market has broken out of essentially a 12-month downtrend. Now that is significant, especially if it is able to hold over the next couple of weeks. If you're able to do that, that could signal that these lows that we saw kind of back in the October timeframe were actually the lows for the past year, maybe even for the next couple of years. Now, we are seeing in the after hours, the stock is all these stocks in the after hours are bouncing around a little bit. Investors can't really decide, but it comes on the heels of a monster rally on Wall Street on this Thursday, up over 7% for Google. So we are giving some back in the after hours, and we'll see how this carries forward into the next trading day, which will be Friday, down about 3% in the after hours. So over the last 24 hours, you're still up over 4% on this stock. Again, that's on the heels of those Q4 earnings, which came out after the bell. Revenue coming in at $76 billion, almost on the nose. That was just 1% growth year over year. In an inflationary environment, when you're growing 1%, you're actually going the other direction. We'll talk about it from an earnings perspective here in a minute, obviously in depth, but Wall Street was expecting a number closer to $76.49 billion. They came underneath that. In Q1, Wall Street's expecting a $70 billion number for Google. We didn't get any guidance, so we're not exactly sure if Google is going to be able to hit that mark or not. That would be a low single-digit mark on that revenue side. We're anticipating that more or less for the next couple of quarters, and then somehow in Q4 and into next year, we're going to go back to a mid-teens grower at Google, which I tell you what, if it does, well, yeah, the stock is probably undervalued at the current time and probably will continue to move higher. But on today's show, we'll discuss the probabilities or the likelihood of something like that happen. Now, when you look at the different business segments at Google, it doesn't paint a good story for a lot of different things. Now, you got Google search, that's gone flat, okay? And look, it's not the worst thing when it's a $43 billion business, but you basically gone flat. In fact, it is actually down sequentially. Now, YouTube, now no wonder, YouTube. I've been posting videos for several years here on YouTube, and I made basically no money last year. And look, I'm blessed to do this. I'm glad all of you are tuning in. If you'd hit the like button and maybe subscribe to the channel, I'd appreciate that as well, because trust me, I ain't making nothing posting these videos. Last year, $8.6 billion worth of revenue off YouTube in a fourth quarter, when there's traditionally a lot of acceleration when it comes to ads. We're also seeing a shift in advertising go from contextual based ads, maybe an ad with like an image or a thumbnail. That's something that kind of Meta or Facebook kind of brought along. Well, we're seeing a shift into video, okay? Short form, long form type of videos. You actually declined year over year on YouTube from 8.6 billion down to about $8 billion. So how they're going to be able to reaccelerate that on YouTube, I don't know. We'll see. It's a sign to me that advertisers either are shifting away from video or they're shifting their video spend. There's more options out there. There's a TikTok, there's an Instagram, there's maybe other just linear TV or even Netflix at these days on that ad side for YouTube video ads. So we'll see how Google is going to be able to maybe reaccelerate this or layer on other types of revenue streams on YouTube, because going in the wrong direction on YouTube is not good, actually, in my opinion. Now, you got your Google network. This is your AdSense. These are your websites. I tell you what, if AI is the next thing to come, I don't know if your search is really that thing that really falls off a map. I think there's going to be a segment of the population that is just comfortable and ingrained typing something into a search bar and clicking on some links, but your advertising on websites might start going down. And we see over the last year, it went from 9.3 down to 8.5 because, instead of going to the travel website or the blog or whatever it is, well, you're not going there because you're having some chatbot tell you these types of things. Now, other business units, you've got your Google Cloud. That went from $5.5 billion, really nice growth here, up to $7.3 billion. Now, what we are always looking at with cloud, we'll talk about the profitability largely. Okay, your Google services business, again, flat from kind of a revenue perspective, even kind of when you take it into totality, especially when you include YouTube declines. On the advertising side, you are down rather significantly, again, in a fourth quarter when advertisers are kind of, advertising quite a bit. And so it brings into question these subsequent quarters. If we missed in the fourth quarter, are we really going to hit the mark in Q1, Q2 at Google? I don't know. I don't necessarily think that's going to be the case. But some positive signs in Google Cloud when it comes to operating income. We've talked about this numerous times whenever we talk about Google. The Google Cloud business, while it has strong revenue growth, again, from $5.5 billion up to $7.3 billion on the revenue side, it hasn't been profitable yet. And it's still not profitable, but maybe sometime in 2023, it'll hit that mark. Last year, you lost $890 million. You've cut that almost in half, if my math is right, maybe it's more than half, down to about $480 million loss. So you're very close. You're basically running at kind of a break even on that Google Cloud. And if you can continue to drive that revenue growth, keep expenses, growing south of that revenue growth, well, it should turn operating profits. Again, not massive operating profits. When we're talking about a $1.3 trillion company, in order to move the needle from a profit perspective takes billions, tens of billions of dollars. And so, yeah, from $480 million to $1 billion in operating profit is great, but it's not going to move the needle. So they're going to have to figure something out at Google. And look, the good news is when you come over here to the balance sheet, the company can figure some stuff out. Now, in a different regulatory environment where you didn't have Democrats going after this company and you didn't have Republicans going after this company, typically here in the United States, the quote kind of deregulation party was typically kind of the conservative party where they didn't want to get in the way of corporations, big business. They allow mergers and acquisitions, allowed corporations to kind of do what they want. And they was also believed maybe kind of a low tax environment. Well, things have changed here in the United States. Okay, you've got the Republican Party that doesn't like big tech, but interestingly enough, the Democratic Party might even be even harder on these companies, believe it or not. If you look what the FTC is doing and the pressure they've been putting on these companies and blocking deals or challenging deals, it basically has frozen this company because, and why that's important with Google is we've got a mountain of cash, $113 billion. People are talking about the NFL deal that they signed, which is probably $2 or $3 billion a year at most for the Sunday ticket. That's nothing. I mean, it is literally nothing to this company with they have all this money, and in an environment where they could basically be out there doing whatever they want, this company would be buying up their growth. So when we look at kind of the revenue estimates, yeah, organically, YouTube might not be growing. Organically, their search business might not be growing, but they'd be out there buying a ton of different companies to spur that revenue growth or kind of feed into that. They can't do that, okay? So their hands are tied there. So we'll come over here to cash flows. We'll see the only use of cash for this company. And the regulatory environment here in the United States, at least when it pertains to big tech, I don't think it's going to change. I don't think the Democrats are all going to be like, oh yeah, Google, you can go out and buy a bunch of companies. They seem anti-corporation, and obviously the Republicans have their beefs with these tech companies. I don't think that's going to change either. And so it puts a company like this in a tight spot, but in a spot that is kind of a blessed position. Okay, we're talking about $113 billion and no uses for it. At some point, it comes down to leadership at Google. At some point, you've got to have leadership from Sundar Pichai over at this company. He's got to do something with this cash. He's got to be able to reaccelerate revenue growth. He's got to come up with new products organically, because what we've seen over the last year, over the last 2 years, they've hired tens of thousands of people over at Google. And what did it do to the revenues? It didn't do anything. In fact, the revenues went down. They went flat in the search business. So you're not driving organic revenue growth. Either the people you hired for the ad business really suck at it, or you don't have leadership driving those people to drive this revenue growth. They're just in there and they're posting TikTok videos and they're relaxing because there's not management and there's not a pressure to perform over at Google. So that's the problem with Google is they haven't proven that they can grow organically, at least over the last year or so. In fact, they've proven that they can hire a bunch of people and then watch their revenues start to decline. And so they can't grow through acquisition based on the regulatory environment. It doesn't appear that they can just hire a bunch of people and these people magically make revenue appear off the businesses that they have. So the company's going to have to prove at some point they can do something. They have almost no debt, just $14.7 billion worth of debt. They don't carry a lot of inventory. This is an asset-light business. Total liabilities coming in at just $109 billion. Total assets, 365, total cash, 113. I mean, this company is swimming in money. Come down here to the profit and loss statement. Again, total revenues ticked up from 75.3 up to 76. But when you look at the core business, the advertising business, it went from 69.4 down to 67.9. So you had some shedding there. Yes, you had some growth in the cloud, and that's really where all the growth is. But I'll remind you that the cloud business, while it is growing rapidly on the revenue side, it still doesn't make money. And it would really have to continue to accelerate revenues when you have Microsoft and when you have Amazon and you have Oracle and you have IBM in the same space. I think the revenue growth, the big revenue growths in cloud is over, and driving profits is going to probably become difficult as well, as you have those other companies cutting prices and offering good deals to enterprise and startups when it comes to cloud. Now, this is what Sundar Pichai was seeing a month or so ago when he started to announce the large layoffs over at Google. Is he saw this, okay? He saw these results at least several weeks ago, and he saw that our revenue is starting to flatten out. The number one growth business that we have is not really a large profit business for the company. And so you see your total costs and expenses over the last year went from $53 billion up to $57.8 billion. So you grew your costs by over $4.3 billion and your revenues barely ticked up. That means your income from operations went from 21.9 all the way down to 18.1. I say all the way. I mean, this is still a fantastic business, okay? They're still printing. Look at this operating profit for a full year, $74 billion. You come all the way down to net income, $60 billion. But again, the problem is last year you were at 76. So you went from 76 down to 60. And again, I understand people are going to be like, this company can afford to pay workers to sit around and do nothing. But that's the challenge of working for a public company is you have to print numbers here for investors. Otherwise, they lose interest in your stock, and then all of a sudden, competitors can crop up and pass you by. From an earnings per share perspective, things look a little bit better because when we get down, there is one use of cash for this company when it comes to cash flows, and I'm sure you can realize what it is if you're reducing the share count over at Google. 2022 is the second column. We pulled in a net income number of $13.6 billion. Again, it was $7 billion higher last year. Okay. They have more employees year over year, and they're printing $7 billion less net income. So it makes me wonder what those people are doing over at Google. And it makes me really wonder if Sundar Pichai is actually the guy for the job at this company. Maybe he was great at Larry Page and Sergey Brin kind of getting this plane up in the air, and then all of a sudden they hit cruise control, and then Sundar Pichai kind of sits in the plane and he glides this because it was like the easiest business in the world to run. Now we need leadership. Now we need someone steering the ship. Now we need somebody with some innovative ideas over here. I'm not sure if we've got the guy on the job over at Google. We'll certainly see over the next couple of years if he's able to pull this off. We've got declining net income, but we get to add things like depreciation. We get to add things like stock-based compensation. Despite rapid decreases in net income, we awarded more stock-based compensation to the executives. Last year it was close to $4 billion. This year, over $5.1 billion. Those add backs offset some things. So when you come down here to cash flow from operations, very similar to Amazon, which we just did a video on, $25 billion worth of positive operating cash flow last year. This year, $23.6 billion. So again, still down though. And so it makes makes me question these hires. What we're doing over at Google is not really incrementally making things better. So in my opinion, that's probably a sign that there's some changes, and it appears that management is kind of on board with that. When you look year over year, despite the fall in net income from $76 billion down to close to $60 billion, your operating cash flows year over year, essentially within a rounding error of each other at about $91 billion. Now, the beauty of this company, and the reason why I continue to hold these shares, this is a top 5 holding for me, is they don't have to spend money on anything. Okay. So they have very little property, plant, and equipment. In fact, when you look at their investing activities, just $6.2 billion in a quarter, just $20 billion for a full year. Again, off $91 billion worth of positive cash flow, $20 billion is not a whole lot. And so what are they spending their money on? Well, yeah, they're rebuying the stock. That's all they possibly can do. The government's not allowing them to buy startups and acquire their way to growth and revenues and profits. And so they're buying back the stock to the tune of $15.4 billion in the most recent quarter. It offsets, obviously, some of the stock-based compensation, or all of it, in fact, of the stock-based compensation. So there's some of that. And look, for the full year, they bought back $60 billion worth of stock. So that's what the company's going to do over the next, 2 years. And so that should support the stock. The stock actually should perform relatively well. Okay. If the S&P 500 is up a couple points, chances are this one will be up a couple points or within a couple of percentage points of that, because they have this mountain of cash. They have barely any expenses. They have huge cash flows, and they'll just use that cash flow to buy back the stock. But into the future, if you want this to not just keep up with the S&P 500, but you want this to outperform like it has over the entire history of the company over the last 10 years, we're up 448%. If we want the next 10 years to be like a 40% CAGR, they need to figure some things out over at Google. And they certainly have the leeway from a balance sheet perspective, a financial perspective, a business perspective. But they've got to start proving this at some point to investors, in my opinion. Not necessarily tomorrow, not next quarter, maybe not even this year. But at some point, they've got to prove that they're going to do something with this $100 billion cash other than just buy back the stock and then watch competitors eventually start to pass them by. Now, from a technical perspective, again, up 7% during the regular trade. Looks like we're down 4% in the after hours. It's basically represented by this red candle here, basically a fake red candle. We're still above trend on this one. This green trend line represents the downward trend line that we've been in really for about a year now in this stock. Breaking out above it, certainly a positive sign. Coming back and back testing, there's an area of support down here at 100, lower than that. If it takes a while, anywhere in kind of the $95 to $100 range. Not really overly concerned with this company from a technical perspective. It is still technically a breakout even when you come and back test, because oftentimes on the back test, you're looking for a rebound higher than the previous high. So right now, the previous highs, unless the stock goes up tomorrow, which doesn't look like it's probably going to be the case, but if the stock ends it down tomorrow, the previous highs were today at 107. So you're looking for a back test to the trend, which I think is probably back to 100. And then you're looking for a rebound. Again, I'm not looking for this to happen next week or over the next 2 weeks. This is really something that it could play out in a week, but more than likely you're looking over the next 60 days or so, a back test to the trend at 100 and a rebound above 107. Boy, if you do that, then yeah, you're starting a pretty bread and butter type of uptrend. Even if you pull back to this level, about $90 per share, you're still technically an uptrend. And I'll kind of zoom this out a little bit. I'll even turn it onto kind of a monthly chart with Google and look at the trend you're on in Google. So here's a 20-year trend with Google. Look where it bottomed out more recently. I mean, sometimes all you got to do is take a step back from a technical perspective. You don't need to know the candle formations or anything like that. Sometimes just do a monthly chart view and zoom it all the way out and put a trend line in and look at where this stock bottomed out in October, down here at about $89 per share, like literally on the line to the dollar of this 20-year uptrend. So the stock is still locked. I mean, we're talking about locked step and even like confirmed that it's still in this kind of 20-year, not quite 20 years, but close to 20-year uptrend. And a lot of it has to do with the fact that they've built a tremendous business, but questions remain over at Google. Do they have the leadership to take this mountain of cash and do something other than just buy back the stock over the next 12 to 24 months? All the employees that they hired did not deliver an ounce. I mean, we're not talking about an ounce of revenue growth in the core business. And we're even looking at a site like YouTube, which you're watching this video on. We actually saw a decline in revenues year over year. So a lot of these people, in my opinion, need to lose their job. And we need to start questioning over at Google, do we have the leadership in place? Maybe the lower level employee is a consequence of bad leadership and bad management over at Google. And I think we've got about 12 months to figure that out before I think we might have to start knocking on the doors of the C-suite at Google and wondering if we need a change at the top. Sundar Pichai's got 12 months to figure this out. We'll certainly be here on the channel to discuss it and dissect it. Hopefully you guys enjoyed today's video. Join us again tomorrow for a Friday FANG Stock recap show where we talk about this more in depth on then. Hopefully, you guys have a great day. Good luck with your investments.